Tesla and Netflix reported earnings and it was a very mixed bag. The market seemed to care more about actual demand than increased profits via cost cutting. And in the environment we're in, I can see why. But that wasn't the only thing weighing on the market. Yield soared to 16-year highs as market participants are trying to figure out where rates are going to peak. With volatility on the rise and uncertainty everywhere, we need to discuss what this means for the market and the economy. Will the Fed change their strategy moving forward into 2024? Where does the NASDAQ and S&P 500 go from here? And when will rates peak? Let's talk about it. Welcome everybody to the daily recap show where we talk about stocks, commodities, and cryptos. If you like this content, please subscribe and hit the notification bell. Let's get into it. No sector was safe except for energy and consumer defensives. Financials copped so much selling in regional banks as well as asset management. There was also particularly large sell side in basic materials as well as industrials. It was just really vicious sell side. It was just completely risk off in the face of higher yields. Before we get into the rest of the video, guys, I just wanted to outline something right here. At the end of every single video, we look at dark pool trades, and this is exactly what I've pointed out in my last couple of videos. Last week Friday, I said this right here was institutions buying for a run up, and then we had the run up. I said this right here was institutions selling to get to the max pain level, which was 430 right here. And then what happened? We sold down, but we did catch a bit up. And then I said in yesterday's video, this was also institution selling to get to this level right here, this 430 level, this max pain level. This is exactly what happened. We saw sell side all the way down into here. We're going to talk about later in the video what this trade means, but so far so good. We caught the up, we caught the down, and this was all based on seasonality. We were looking at the October OPEX week. We said it was pretty bullish. We were ahead of seasonality. We were above max pain for the SPY. That probably meant we were going lower. We saw the trade confirmations come in, and that's how we knew to sell yesterday's high. Moving on to earnings, and we had the big ones report, Tesla and Netflix. Post earnings, Netflix was up 12.73%. They had some very good earnings, and Tesla was down 3.67 on top of nearly a 5% down day in normal trading hours. So let's have a look at Netflix earnings. What were the key points? I'm just going to go through this really quickly. The reason why Netflix had a massive bid up in aftermarket trading is because they added 9 million subscribers in the third quarter, and they now have 247 million subscribers, which exceeded expectations. Revenue increased despite challenges such as the Hollywood strikes. Revenue reached $8.5 billion in the quarter, an 8% increase, as well as the net income for the quarter was $1.6 billion, which is a 20% increase from the third quarter last year. They also plan to now spend $13 billion on content for the year, which is a reduction from $17 billion, as well as they increased their monthly subscription price for their premium ad-free service from $19.99 to $22.99, which is, I believe, a 10% increase or a 12% increase, which is pretty good. So it does show that Netflix does have pricing power, and we're going to see how Q4 goes. If they can increase subscribers while maintaining this price, that is significant. Netflix also introduced a less expensive subscription tier, $6.99 a month, which includes advertisers aiming to generate additional revenue to attract cost-conscious customers, as well as ad tier memberships and password sharing. Netflix reported a significant increase in their ad tier memberships and success in combating password sharing, which is really great. Just fantastic reported earnings there for Netflix. But let's move on to the one you all want to hear about, Tesla. Now, Tesla's adjusted Q3 earnings were $2.3 billion, 66 cents per share, a 37% decrease from the previous year, which was expected at 73 cents per share. Q3 revenue came in at $23.4 billion, up 9%. So they did increase revenue, but it fell short of the anticipated $24.1 billion. And this was largely because of price cuts. Okay, price cuts were just affecting revenue, profit margins, and everything came down to price cuts. And you can see right here, gross margins dropped to 17.9%, which is down 7% from the previous year, which is quite substantial, especially when you add to the fact that excluding credits, it fell 11%. Tesla aimed to reduce costs with necessary upgrades, but acknowledged higher costs at new factories in Texas and Germany. A lot of the margins is not just price cuts, but it also has to do with the fact that it does cost a lot of money to get a factory set up, and there was production impacts, temporary shutdowns, and higher interest rates affected both profit and sales. And they still reiterated that they're 1.8 million vehicles this year, and to achieve that they need a 17% increase in Q4 sales, which is very lofty. But if there's one person that can do it, it is Elon Musk. The Cybertruck, the new addition to their fleet, The company plans to deliver the Cybertruck by year end with its first deliveries on November 30th. Earnings were not too great from Tesla there. I could see some further sell side into tomorrow. They are probably down about 7% in total for the day, expected to go lower tomorrow. Maybe there might be some form of a dead cat bounce, but the market definitely did not like these earnings. And the reason why is because yields are the reason. Let's actually go have a look at yields. So this is the 2-year yield right here. You can see that the 2-year yield, has been pushing higher over the last 4 or 5 sessions. The exact same thing is true for the 10-year yield. It's been pushing higher, and yield as a whole is pushing higher. The 10-year is nearly at 5%. The 30-year bond is at 5.013%, right? It's nearly at the 5.1% mark, which is really, really good because you want to see the 30-year go higher, because that's how the yield curve is going to uninvert and, get back to some form of normalcy in this market. And something that's absolutely crazy, a 30-year fixed mortgage rate just hit 8% for the first time since 2000 because treasury yields are soaring. And we do know that mortgage demand is at 30-year lows, and this is not just going to help it. So the only thing that's going to fix this is either we get interest rate cuts, or like overall house prices are going to have to fall significantly for the average American to afford a 8% loan on a house. Now, the reason why yields were soaring had to do with what the bond auction did yesterday. So there was a bond auction yesterday, and what actually happened was $13 billion of extra bonds got issued on top of the previously auctioned bonds, which means dealers said, hey, for us to take up this $13 billion in extra bonds, we're going to need a better rate. And that's exactly what the market gave them. A better rate, which means higher yields, lower bond prices. The reason why yields are so destructive to the financial market is because it affects margins. Now, have a look here. This is forward margin estimates. Now, you can see here that margins have fallen, but a lot of people believe that margins have now troughed. You can see here that because we are expecting some form of rate cuts in 2024, it seems that this area right here is likely the low for margins, and we probably should see better margins looking ahead into 2024, 2025. At least these are Wall Street consensus estimates. This could bode really, really well for stocks, but we have to see what happens with rates. Let's get into the market as a whole, and we can see here this is Goldman Sachs, and this is the breadth index, and we can see here that market breadth is at 10. The average is about 35, the 30-year average, so around about this mark right here. This is nothing new to us. We do know that most of this run has been in the mega cap 7, mega cap 50, as well as small caps and mid caps, not really seeing much of rotation into them this year. This is also the Russell 2000 seasonality. This is where we are right now. If I actually show you a chart of the Russell 2000, this is the seasonal chart, and this right here is the actual chart of the IWM, the Russell 2000. They are very, very similar. Right now, we are at this low. Based on seasonality, we could see some fairly bullish action into the Russell. That's really going to depend on yields. Everything comes down to yields, because something like 17 to 20% of the companies in the Russell are zombie companies. They have just enough money to cover their expenses and debts. But when will we expect rate cuts? Because if we cut rates, the Russell 2000, these small caps, these mid caps become much more attractive as companies to buy. And we are expecting rate cuts in April 2024, May 2024, or possibly as early as March. Now, we can also see here that based on FMS investors, 56% of them see lower bond yields in the next 12 months. Could we see lower rates? According to FMS investors, in the next 12 months, we will see lower rates. Further backing up that stat, this is the 10-year to 2-year spread, as well as the federal funds effective rate. This gray line is a recession, when recessions have occurred. And once the yield curve inverts and then uninverts, normally we get a recession. And with the recession comes falling rates. The same is true here, here, and here. And right now we can see that the yield curve is inverted. And we can see here that the yield curve in 2023 is inverted. Once we get the uninversion, we get our recession, and then rates fall. At least that's the theory. So we have all of this confluence aligning to the fact that rates are probably going to fall. And does that mean rates have topped? It means in the interim, we are nearing the top, at least in my opinion. So let's move away from interest rates and the macros, and let's actually look at seasonality. This is the NASDAQ Q4 rally, and I believe this is just the NASDAQ composite. Now, this is some very, very interesting stuff. It's the Q4 rally from the October low into the November-December high and into the year end. from the October low through to December 31st, or the last trading day of the year, percentage change on average is 9.5% increase and the median is 8.2% increase. The best performing year was 54.5% in a 3-month span. That's crazy. And the worst was negative 19.6%. The win rate is 88.5%. If we actually look at the October low to the highest point in November and December, we actually see that the average is 13.1%, the maximum being again 54.5% at the high, and a win rate of 98.1%. And during an election year, we have never seen a negative Q4 year-end rally. So this means that the NASDAQ 100 is poised for a Q4 rally. Let's get into some unusual options volume, and it was huge volumes everywhere. NVDA, a $1 trillion company, or having 2.6 times 90-day volume, $2.3 billion in puts. Absolutely insane. Same year with Tesla, the usual culprits because they were reporting. There's Netflix on there. Netflix was 1.5 times average volume, and it's probably going to be huge tomorrow. As well as, it's just huge tech names, Block, Meta, Bookings Holdings. We saw this with a couple of hotels, and we also saw Goldman Sachs with some pretty huge volume here, 136 million puts to 12.84 million calls. But overall, it was a pretty big day for volume. Have a look here. We had 54% puts to 46% calls, so huge amount of puts coming. Really love to see this. You normally see this on a red day, but it's also good to see some further bullish action in the couple of days ahead. It does put up a bit of a put wall, and we could see here 43 million options contracts. And we also did have the VIX contract expire today, and that's why the options contracts were absolutely huge. It means in the interim, we are nearing the top, at least in my opinion. So let's move away from interest rates and the macros, and let's actually look at seasonality. This is the NASDAQ Q4 rally, and I believe this is just the NASDAQ composite. Now, this is some very, very interesting stuff. It's the Q4 rally from the October low into the November-December high and into the year end. From the October low through to December 31st, or the last trading day of the year, percentage change on average is 9.5% increase and the median is 8.2% increase. The best performing year was 54.5% in a 3-month span. That's crazy. And the worst was negative 19.6%. The win rate is 88.5%. If we actually look at the October low to the highest point in November and December, we actually see that the average is 13.1%, the maximum being again 54.5% at the high, and a win rate of 98.1%. And during an election year, we have never seen a negative Q4 year-end rally. So this means that the NASDAQ 100 is poised for a Q4 rally. Now let's get into some interesting dark pool trades. And now guys, just remember, Max Payne is at 430. I showed you this chart earlier. We said buy here, sell here, sell here. We saw a massive, huge dark pool print right here. One of the biggest dark pool trade for the week, actually. It probably means we get a bounce into the next trading day. We probably get a bounce, nothing too big. I do think we get a bounce, but we will probably finish the week off at this 430 level right here. This is Max Payne for the SPY. And that's probably where we're going to end the S&P 500. Moving on to the Qs, very, very similar situation. We said buy here, shorts all the way down here. Now we are seeing some bullish action right here. Max Payne is at 367, and I do expect the Qs to have a bigger bounce to this area right here. So I do think these are some buy trades. Market makers want to get this price to Max Payne. So we're probably going to see a pretty substantial bounce in the Qs tomorrow. Could also be some short covering in the IWM. Massive trades coming here at the lows of the day, and I think we're going to 177, this area right here. I think we're going to go with this area. I think the Russell 2000 is poised for some very big upward action over the next 2 to 3 days. Thank you guys so much for watching. If you like this video, please like, comment, share it, leave a comment what you want to see, what you want me to go over. Thank you so much guys. Have a good one.